Today we're going to be talking about risk reward. Stay tuned, traders. We'll be right back. G'day traders, I'm Stacy Burke from Stacy Burke Trading. Today we're going to be veering off the tactical track a little bit and talking about risk reward, which I think is really paramount and important to understand for a couple of reasons. Not everybody approaches their risk reward strategies the way that I do. I'm going to just talk about how mechanically I look at risk reward each session, where we're at in relation to how that market has traded and evolved, and then looking at how I can target 2, 5, or 10 to 1 opportunities and how I can gauge those in terms of their high risk or prepared to put more size on and high possibility setups versus putting size on a low probability, low risk reward setup. Before we do that though, again, I'd like to say thank you to everybody. Again, a ton of emails daily right now, just a lot of emails and comments, and again trying to get through and answer questions and also answer those questions on the board. Thank you. And also for people who are watching who keep emailing and asking about indicators, the iSessions indicator and the Sweet Spots indicator for the round numbers are in the box below in the description box. They're free downloads for MT4. You can probably use them on MT5 as well, but they're free. They're right there. You just put in your double zeros and quarter levels, and the rest is easy. It's the color sessions you set to the timing window. Again, Asia 8 to 11 p.m., London 2 a.m. to 5 a.m., and New York 8 to 11 a.m., which obviously on the 24-hour clock, just working backwards, very easy to calculate. So take a second for me and do me a favor and hit the like button. Again, that's been a tremendous growth for the channel. A lot of traders getting recommended the videos, and a lot of feedback that it's made a big difference for a lot of people who have been struggling. And again, I know what that's like, and I've learned the hard way. Everything that I provide with you here is stuff that I've learned from grabbing bits and pieces from books, seminars, people over the years, hundreds of little things that finally come together. And it's hard sometimes, as we talked about in one of the videos recently, just processing and getting all that information so that it becomes unconscious competence. One of the things that took me a while to understand was not only the setups in terms of targeting the best setups at the timing window to increase my likelihood of hopefully being successful, but then also understanding and learning the hard way of when to maybe want to be able to put more size on certain trade setups, indeed where the possibility for a higher risk reward setup was there, and rather than putting size on and trying to scalp pips and getting whipsawed and chewed up, especially in those gap times, which we've talked about, and a lot of traders have told me they've experienced that as well. Knowing when and how to understand and interpret some of those opportunities when they present. And that comes back to looking at our session highs and lows, but also understanding not only the daily template, Monday, Tuesday, Wednesday, Friday, Monday, narrow range days, but also understanding that as the day evolves, potentially now we are expanding the range and increasing the high and low amount of pips in terms of our high-low distance, which therefore, depending on how that market sets up and trades for the day, can increase our asymmetrical risk reward. So again, we might be trading 2.5 to 1, 3 to 1 in Asia. If it's a 25 to 50 pip box, we're going to talk about understanding sort of the importance around numbers and how that can help. But when we go through the weekly cycle and we start to get up high or down low or we're inside, some of these risk reward setups are better waiting for the sessions to evolve or before you increase size. So obviously there could be 50 pips in Asia, London, and New York in the opens of each session, but we may be targeting some bigger moves as we've seen in New York after Asia and London have possibly put in a high-low bracket that's expanded the range. And then depending on how the market trades in the gap time into the open, that can help us identify if we're in maybe a 5 to 1, a 10 to 1, or if we're just in a range-bound choppy market. Okay, so let's get into it. I know I talked about the 15-minute charts, British pound. You can use the 1-minute charts. Again, like I like the 15-minute charts. It smooths out the price action. It gives you your clear levels. You can spot traders that are already in profitable moves. But I like to use the 1-minute charts in our timing window in that first hour and also in our equity hour. Very important, because often by the time the 15-minute bar may confirm or give us an indication that the 1-minute chart is already up 25 pips. So I like to try and keep my stops on the 1-minute chart to 15 pips, and usually the ones, when you're right, they're never more than 15 pips. A lot of times it's less. And if you're wrong and you go more than 15 to 20, now you're most likely going to the next quarter level, which means you could even be in a measured move. So important to have a hard stop, and especially if you understand. Like somebody asked me the other day about being at the screen for hours. I want to be at the screen and be done hopefully in that first hour. A lot of the pre-market stuff before the equity hour opens in London and New York can offer 25 to 50 pips that are fast moves with very little stress. And so some of those are 50 pip moves, and some of them are 25 and 25. It depends on how that setup is, but we're going to talk a little bit about that. Every day is unique, so there's no cookie cutter approach. And as I mentioned yesterday, you could be in a very strongly moving market, you could be in a long market, but the 50 pip trade may be a counter trend trade. So I'm interested in being in trades that move fairly quickly and fast, and there's very little stress about getting into a position. So I'm not trying to get in front of a falling knife and pick the bottom or anything else. I want to let the timing window tell us. We saw a great example of that this morning on gold. 30 minutes working the high. They put a little W in the first 7 minutes. They went up for the next 25 minutes and worked the high, worked the high, worked the high at the quarter level, 25 pips above the double zeros. And then in that third 15-minute candle, went 1, 2, 3 and reversed at 25 and went back for 50 pips straight down through the double zeros. So an example of where the market initially opened up with a fast little W for a reversal, and then for the next 30 minutes proceeded to go up to the quarter level. So again, if you were long off double zeros, you're looking at a 25 pip target. So after 30 minutes, it's only gone 30 pips. You're looking at 2 to 1. But when the market gave us our little reversal off the top, there's two areas that this could possibly meet resistance. Obviously double zeros and then the low of the day. This again is a setup that I would consider as a 2 to 1 size setup. So there's a probability that it could fail at double zeros, but there's a possibility we could go back to the low of the day and continue working down. And that has to do with again looking at the overall pattern. Sometimes you can't tell, but I know that zeros can be resistance. I'm splitting the box, so I'm going to mark this off as a 2 to 1 setup, which means I'm going to just put a certain size on that trade. There's a high possibility of its success for at least 25, and there's a possibility it may go to 50. So at the same time though, that's a bit different than a market that's traded over the course of the day, where maybe Asia's put a high in and London's put a low in, and it's a 150 pip box or a 75 pip box, and New York goes up into the open for a sell, and now we possibly have a measured move of over 100 pips. If I'm risking 15, targeting at least 50 and maybe 100 or 150, if we get a measured move, a range expansion, I'm going to put that in my 10 to 1 category. So again, as the day evolved and our range expanded, if I'm selling high and I'm going to look at that market going down, I'm going to put it in my 10 to 1 category. If London opens at 25 and they auction down, or Europe opens at 25 and they auction down into the London Open and give me a W, and I'm looking at 50 as my target because I got lower highs here, I'm going to put that in my 5 to 1 category. So again, the size of my trades in terms of my dollar size, my risk, will be based on how much room and the numbers and the session timings of our high and low for the day. So as the day evolves, if our range expands and the market is set up to sell off or to have a stop hunt for a 50 or 100 pip move, I'm going to be prepared to put more size on that. But if we're in a narrow range day and we're trading between a quarter level, and the market is inside of the Asia high and London's trading inside of it, I still may be just trading that as a normal 2-to-1 setup, meaning that as your account grows, you might only be risking a certain amount. Some people like to use a percentage of risk. Other people will use a dollar amount that they'll risk. Every day is unique, and you're obviously going to make decisions as that market evolves and becomes into the session. So again, the questions I look at are, where are my round numbers? Am I going to meet resistance at a round number that possibly could be 25? Am I getting in at the bottom of a 50 pip box? Or are we looking at that this market possibly now has had 3 levels of rise and it's a 75 pip box back down to the low or the high? Or are we in a 100 pip box working double zeros? We could see a 100 pip move, or maybe even a range expansion, 150, as we saw in gold last night, 250 pips. So most pairs will have a day where they do the same thing, whether it's the pound, the euro, and we talked about major round numbers. So obviously if the pound's working up into double zeros heading into a US session and it's come off of 50, maybe it's in a trend, it might break through. Or it's gone up in Asia, come back down, went up again in London, we may have at least a 50 pip move back down or more. We saw a 100 pip move a couple Fridays ago. So again, that all depends on how the week evolves. You know, we could have Monday, Tuesday, Wednesday, Thursday, we might get a big move on Friday back to the low, that sort of scenario. So as the week evolves, those ranges can get bigger, but also as the sessions evolve, they can get bigger. So as the day's evolving, if I'm in a tight range, I'm probably just going to be targeting 2.5 to 1, depending. London, it might be 5. Sometimes in Asia, we get 50 pips right off the bat. It all depends on how that first hour sets up. But if I'm targeting 50 pips, I'm probably going to be going with my 5-to-1 setup. If I'm looking at 25 and 25, I will probably lower that down and just be happy to take the 50 pips. But if I'm heading into a session like New York, and we've had Asia and London establish a bigger range, and the setup's a creeper up into the high, or they're working it into a squeeze for an explosive move, I'm going to be prepared to either add positions in as that confirmation happens with price action and scale my risk in. But I'm targeting, again, 10-to-1, 15 to 20 pips of risk. And again, if you're on the 15-minute charts, that may evolve over the course of the week for the bigger range expansion or trend trade or reversal trade as the week evolves. So we'll take a look at some charts just in terms of how that evolves over the course of the sessions over the week. And then obviously everybody can make their own decisions regarding risk reward, but as the ranges expand, I'm looking and targeting those bigger asymmetrical risk reward opportunities. So hopefully you got value from today's video, traders. And again, day 1, day 2, day 3, narrow range days potentially are leading into trend days or range expansion days where we can get a strong trend or a breakout of a box and then a continuation trend day the following day. Stay disciplined. Again, thank you for a ton of great feedback, great comments. Keep getting better. Focus on the big picture. Keep it simple, a little bit better, 1% better every single day, and may the markets go with you.
Good day, traders. Stacy Burke from Stacy Burke Trading. We're talking about risk reward today. And again, people have different ideas in terms of how they want to manage their risk or target certain risk reward setups. Ideally, I'm looking at 5-to-1 and 10-to-1 opportunities, but there are certain setups that are possibly high probability or high possibility setups, but I will not put increased size on those trades because they may be only 25 to 50 pips of movement rather than a strong 50 pip stop hunt squeeze or something like that, or a 100 pip move that should be a very fast, aggressive moving trade. So as the day evolves, as each session evolves, there are ways to that I look at the market in terms of gauging whether or not this is going to be a fast blow-off move, if it's going to be a reversal trade. Are we into the third session of the day? So again, looking at Asia, London, New York. And as the day evolves, knowing that, we'll just put some lines on here, knowing that as Asia prints, and we get the opportunity and we see the range expand. So we talked about hitting the stops, pulling back. Markets do three things: continuing the move, pulling back after the stop hunt, hitting the move, and again an opportunity like this. We have stops above as we're heading into the Asia Open. Typically Asia I would expect to move 50 pips. Sometimes it moves more. Today's an example of it moving more, but point being that as we come into the session, we've got double zeros and 25. They've hit the stops. We're going into a peak formation. Again, this trade may give 50. It may give 25 and 25. So I would categorize that as one of my 2.5, 2-to-1 types of setups, which means I'm not going to put huge size on, but I have a strong conviction that it's a high probability opportunity, just not a high asymmetrical risk reward opportunity. So again, this market gives 25 and 50 in a fairly hour and a half, but then they pull back inside. And again, as our range expands, now our high-low increases, depending on how that market trades in the gap time into the next session. So again, double zeros and 50s. I'm targeting possibly a 4 to 5 to 1 setup. So again, possibly increasing to the next level. I have a 5 to 1 opportunity. I have a high probability opportunity from my playbook that I'm reasonably confident in that is going to be a successful trade. But again, not prepared to put increased risk on. I'll just hold my normal parameters. But again, as we see the day evolve and our high-low spread further apart, we're now in a 100 pip box as opposed to a 50 pip box. The market went up 25 and then 50, so 75 pips. And our high-low of the whole day and where that move began from the low of this move up now is a 200 pip box. So again, traders from the US session close that were long on that last push down is where that whole move up began. So we have our low of the day, but also where that move began. And we're now targeting a possibility of a 200 pip range. So even if we were just targeting the low of the day, we're still looking at 125 to 150 pips from the high to the low. So again, just understanding as the market trades down in the gap time and the stop hunt is up, we may have an opportunity to be selling high with a 10 to 1 risk reward opportunity. Those are the sort of setups that I'd be looking for to possibly put increased size on, and depending on the probability or conviction behind that setup. So again, if it's a good setup but the trade doesn't play out the same in live time, I may reduce that amount of exposure on there, but again targeting 7, 8, 9, 10 times my risk. And again, as we head into the next session, we have our high lows of the US session swings, low of the day, and the last swing high. So again, we're in a box, 75 pips. Heading into the next day, we get our bear pin hammer up high inside of a higher rectangle after 3 pushes into the 50 level. So this is an opportunity that as it starts to go into the open, again targeting 50 pips at least, from double zeros to 50, that this may again be a 5 to 1 opportunity. So I have a reasonably strong conviction that this is going to be a strong move as we have a trend breakout rolling over for possibly a blow off of at least 50 pips. But how confident am I that this has the potential to go 100 or more? Well, not a lot of confidence. Asia may not, but it's a weekly peak formation low, possibly. We have that blow off coming into the open. It goes the 100 pip box before pulling back at the 50 level. So again, I'm reasonably confident, but possibly not as confident as I will be as the day evolves for 100 or more pips. So again, just adjusting my size, I have more confidence than trading into a 25 pip box, and 50 for sure is my target on this. If it only goes 25, I'm at break even anyways, but I have a reasonably strong conviction that this market will break out, pull back, and blow off into that move. We head into the next session. The market has reversed and given us a peak formation high in the rollover in the gap time. So we've hit the stops on the downside. We've hit the stops on the upside and then pulled back into in the middle into consolidation, and then they proceed to work down into double zero. So again, possibility to revisit the high, but I could find resistance at 50. So again, targeting a 50 pip box. And again, just conviction behind this setup on the 1 minute, possibly, and also confident that this move will go, but how confident past 50? Well, price action didn't take me past that. And again, I'm inside of a range, so I'm reasonably confident, but not going to increase any risk on this trade. But as we get our creeping trend over the course of the London session and into the gap time for 3 pushes, I'm reasonably confident that we could potentially have an explosive squeeze trade for a 50, 100 or more pip move through the high of the day. And if we get a full range expansion of the high-low, that indeed is targeting possibly a 200 pip move. So again, reasonably confident that we'll see an explosive move or a stop to the high, and I'm prepared based on how that market trades in that first hour to increase my risk on this trade as my confidence and the price action confirms that. So again, I'm basing my risk reward on the setup, where we're at in the timing of the day, Asia, London, New York, but also in terms of the template. So this was Friday. This was we had 4 days down. So we'd come down for 4 days, inside bar Monday, day 1, day 2, day 3, takes out a peak reversal, a W formation, and then consolidation. This market was ripe for a stop on high and a consolidation and reversal on Monday. And again, heading into the next day, Asia trades down in the session, possibly putting a low of the day in place, and again brings us up to double zeros. Again, I'm trading back into price action. Well, I wouldn't be prepared to put a lot of size on that. I'd be more confident trading this as a 2-to-1 risk reward. Might get 50, possibly going to see resistance at 25. I'm reasonably confident that we'll see a retracement, but how strong? Not confident. So again, targeting 25 minimum. I'm going to keep my risk very tight on this trade. But as the day evolves, we get a breakout of that geometry. Now we're potentially in a trend day as we're making new highs. So the market doesn't break out, pull back, and then roll back inside. We break into the upper double zero box, pull back, hit the high again, pull back, and continue to make new highs. So we're not hitting stops and pulling back. We're now in a breakout and possibly a trading range as we, a trending day, as we came out of the day zero reversal. Now we're possibly in a strongly trending market. And that being the case, depending on how that setup evolves into the New York Open, stop hunt low for a long trade. Again, we are trading into double zeros. We could find resistance. It happens in that first hour, but a strong explosive move. I'm confident, but again, maybe not as a blow-off move, even though it's a trending market. We may find resistance at the round numbers. I'll trade that as a 5-to-1 risk reward. So again, adjusting risk on certain trade setups based on experience and also based on where we're at in the week and the session of the day. So again, we go up on that day, and again, coming back and looking at our previous week, we can see that the market traded through the last swing highs into that Tuesday morning in Asia. So again, long, possibly following through the stop hunt low to 75 to retest the high of the day. That's a 50 pip box. Again, reasonably confident into the open based on the setup that was going to continue to go, but how much further? Not sure. So again, any uncertainty, I'm going to adjust my risk accordingly. Happy to take the trade and control my risk, but not potentially to consider it as a 10-to-1 opportunity. So again, you can see as the day evolves and the range expands, we go up high and hit the stops. They come back down in London and hit the stops. Then they pull it back into consolidation to double zeros, fall over. And there's a 100 pip potential move there. 75 for sure to take out the low. So you're increasing from 25, 50, 75 to 100 now. So we're going to risk 15 to 20 pips up top to get in somewhere close to that engulfment on the 1 minute at round numbers, and a blow-off move hitting stops from Monday's breakout U.S. session trade. Again, the same thing. Every session as the day evolves, our range expands. We hit the stops up high from the U.S. session yesterday, hit the stops, pull it back into consolidation, creeping trend down, hitting stops, pulling back, hitting stops at the London high. Creeping down, hitting the stops at the low of the day, pulling back, hitting the stops, consolidating, engulfment at the high off double zeros. We've got the low of the day is a 75 pip box. We also have other lows in place from the previous day's low. So again, more than 100 pips potential. 75 for sure is our minimum possible target. So again, now we're getting that 7, 10, maybe 15 times our risk potential in a trade setup as the range expands throughout the day. And again, as we trade throughout the week, we can see that the market has got a low of the week and we've got a high of the week. And we may be visiting one of those levels off of the high or low of a day, which means, again, we can calculate risk reward. This morning, Asia has given us a bigger range than normal. They're working down into the low, which tells us we may be putting a low in for now. They may expand that low in London or come back up towards the high and make a higher high. But as that range expands, depending on how they trade heading into New York, we may have a peak formation low in place from yesterday and possibly a retest of not only today's high, but maybe yesterday's high. So again, as the range expands, our risk reward opportunities increase, and so does my conviction on certain trade setups. Hopefully that helps traders. Again, risk reward, your own discretion and controlling risk on every single trade is the number one paramount thing you can do as a trader. Stay disciplined, stay focused, and may the markets go with you.
Hi traders, it's Stacy Burke from Stacy Burke Trading. If you haven't done so, please head over to my website at stacyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High-Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.